trade, the trader's flame. Hola, prying the rhythm of the trade, where the bold and the fearless are made. From London to New York, the thrill's the same. Step into the beat of the Hola prying game. Fortune favors those who dare. In the heartbeat of the market we declare, Hola prying is more than a name. It's the pulse of the trade, the trader's flame. Trade. Chasing the charts under neon skies. Hola prime's the name where the profits rise. Fingers on the keys, dreams taking flight. We trade the future, we own the night. Hola prime, the rhythm of the trade, where the bold and the fearless are made. From London to New York, the thrill's the same. Step into the beat of the Hola prime game. Candles dancing on the screen's bright glow. Risk and reward in the ebb and flow.
Hello, everybody. As always, good morning, good afternoon, good evening, wherever you are in the world. I am Coach Paul, and this is the Hola Prime Market News Update. This evening, Japanese CPI figures were released. Japanese core CPI year over year was 3.1%, below the previous reading of 3.3%, but more than the forecast of 3%. Regular CPI also came in at 3.1%, in line with expectations. Japanese yen had a relatively steep loss today against the US dollar, down 0.76%. The USD JPY pair is currently trading at 148.44 as of this writing. US equity markets saw some selling pressure today. The S&P 500 and the Nasdaq futures both had an inside trading day, trading down 0.37% and 0.43% respectively. The ES is trading at 63.97 and the NQ is trading at 23,250 as of now. The Dow traded down as much as 350 points on the day, but was able to recover for only a 0.27% loss and is currently trading at 44,917. The US dollar showed some more strength today amongst the major currency pairs in a range-bound trading day for the equity markets. Euro USD sold off by 0.42%, closing right at the 1.1625 level. Euro USD is trading at 1.1631 as of this writing. CAD USD saw further selling pressure today, logging a 0.28% loss. The pair is currently trading at 0.72, an area we previously saw support at back around May 16th. GBP USD is currently trading at 1.3421, down about 0.31% from the previous day's close. Note the UK's consumer confidence score of negative 17 came in slightly above expectations today of negative 20, likely not enough to have a large effect on the currency pair. The Swiss franc traded down versus the US dollar 0.63% in today's session, rejecting the upper bound of its 3-week range. And lastly, the New Zealand dollar was flat today, trading in a very small range and currently sits at 0.5825. Cryptocurrencies continued their slide today. Bitcoin dropped $1,600, or about 1.4% from the previous day's close, and is currently trading at $112,470 as of this writing. Ethereum is down 1.96% and is currently trading at $4,250. To touch on some others, we have Litecoin down 1.3%, XRP down 3.16%, and Solana down 2.5% on the day. Gold futures are down about 0.25% on the day after a nice $30 per ounce rebound on Wednesday, currently trading close to the middle of their 4-month range at about $3,382 per troy ounce. Silver futures shook off the selling pressure, closing up on the day about 0.56%. So silver is holding its upward trend, with support being respected at the 50-period EMA on the daily chart. Silver futures are currently trading at $38.05 per troy ounce. WTI crude oil futures have rebounded nicely off of the $62 per barrel support level we've seen over this past week. We saw some bullish continuation today, with crude breaking through the $63 level and closing at $63.50. Tomorrow, we have continuation of the Jackson Hole Symposium, with all eyes on Jerome Powell, who will be speaking at 10 a.m. Eastern Time. So now, without further ado, it is time for our Quiet Markets live trading session with myself and Coach Tiger. So let's get to the trading.
Hey,
All right. Where are they? We're here. We're here.
just
How's it
in the
going,
nick
Coach
of
Tiger?
time.
How's everything going?
Oh, it's excellent, man. Great day. Wonderful day.
Awesome.
Thursdays are
Love to
good
hear it.
because it's almost Friday. That's why Thursdays are good.
Exactly. I mean, I'm right there with you. I'm very happy for the weekend to be rolling around. Going to be a nice, relaxing weekend for me. Got anything planned?
Yeah. So let's see here. Got a brand new Mexican restaurant that opened up here by my place. So I'm gonna go grab
Nice.
my beautiful woman, and we're gonna go have us a nice dinner and take my sister along, and yeah, it's gonna be a good evening.
Awesome.
Probably go back and sip on a beer or two, or maybe three. I don't know, something like that.
Maybe a little margarita or something. Maybe get a
Oh, gosh.
little spicy there.
I don't know. I'll be driving, so I won't. I may have one at the restaurant. Just wait till we get back to her place. I don't know. I don't really do the hard stuff anymore. Just give me like a
Yeah.
few beers, I'm good, just enough to kind of relax, play some music, have a conversation for
No.
like 5 hours, and then finally fall asleep. That's typically what she and I do.
Yeah,
So
yeah. I completely get that. I completely get that. My body can barely handle the light stuff, let alone the harder stuff. So
yeah,
I'm right there with
yeah.
you.
Well, I finally figured out my threshold. Just give me like a 6 pack Coors Light, maybe like a double pounder, and that's it. Cut it off after that. Can't do it anymore like the 20s and the 30s. It gets tougher and tougher. So
Yeah.
it's just enough for good
Yep.
conversation and knock me out and go to sleep. So good stuff.
Dude, my
But
20s. My 20s, man. Do I wish I had the body the my body's abilities from the 20s to recover. Jeez.
all right.
You
Mm-hmm.
don't appreciate it. You don't appreciate it until you're older. So, I mean, not that, we're old, but we are older, so
Well seasoned, Paul. We're well seasoned. or not old.
Exactly.
Just about ready
Exactly.
to well seasoned, just about ready to throw on the grill. That's the way I see it.
Yeah, exactly. True. That's a good way of putting it. I like that. That's so like
Yeah.
optimistic and makes me feel good. All right.
Yep. That's right. It's all
Oh,
how you look
man.
at it.
Yeah, man.
How was
How was the
how was
how was the trading day for you?
that was good. 2 out of 2.
Yeah,
I can't complain. Yeah.
let's
I,
go.
one of the rarer days that I have 2 trades. So, but yeah, I made profits on both of them. Couple, they were both in the smaller time frames, 5 and 15 minute zones. Felt like a
Nice.
scalper. Went down to the 1 minute and just waited for some volume spikes. It was pretty good. It's funny because the first trade I got in this morning on Forex Fire was gold, the XAU USD, and
Ah,
I on my GUI trades I preloaded the trade on the little trade window there with the intention of just leaving it there in case I wanted to hit the button so I could watch price action. Well, I got it confused with my other broker because on one of my other brokers, you hit trade and then you have to confirm. Are you sure you want to enter the position or whatever? So
right.
I did that and forgot that it's just instant transaction. So I got into the trade earlier than I wanted, but it actually worked out perfect. It's quite funny. It went down to
Awesome.
right by my stop loss, got within like a few pipettes because I love using that word.
Mhm.
And then it just totally reversed and went and tagged me out for a profit. And then, yeah, after the stream was over, I jumped into a dollar Japanese yen short sell. And yeah, just worked out great. I had a demand zone
Awesome.
buy, I had a short sell or a supply zone sell. So one of each and pretty good. Yeah, I'll show them on the chart here in a minute for
Yeah, sweet.
show.
Sweet.
XAUUSD. Yeah, how about yourself?
It was a good day. Great day. Actually, I was up between the two accounts I was trading. I was up like a little like $601 or something. So it was a good day. Very good. I
Yeah.
was very happy with it. I actually in the one account I traded live cattle and soybeans. Live cattle was like a $250 or a $230 loss or something, but then the soybeans trade that I
Mm-hmm.
made was like a $580 gain. So
Okay.
it was a yeah, it was a big boy trade. It was my first trade ever on soybeans, and it was an awesome one. And I mean, it was all just so clear when I basically zoomed out, looked at the daily time frame, then I looked at the 4 hour, then I looked at the 30 minute, like got down to the 5 minute, and I was like, this just looks so good. Like I have to do this. I've always said that I want to trade. I want to get into a trade at some point with soybeans with all the agricultural stuff, and it was like now or never. And I got into it. 2 hours later, my take profit hit perfectly, and I like walked like because it was during the break. I got in right before our break, our afternoon break, and then when I came back at like 1:30, got hit, and I was like, perfect, perfect. So that was good. And
Yeah.
then I scalped a bunch between the YM and the Nasdaq in my other account through the day, and I was up like $300 or like 280 or something like that. So it was
Yeah.
good.
Good deal.
Yeah.
Yeah, I was watching part of you guys' stream. I heard you talking about the soybeans. So good deal.
Yes. Yes. Yes.
I
I
had
mean, right
trouble.
now,
I had trouble getting to sleep this
shoot.
morning too. I watched part of the stream. And that's about the time I start, dozing off. And then I laid to bed. I think I tossed and turned for like 2 hours. I got like 4 hours of sleep, but it's all
Right.
good. Get the adrenaline
That's
flowing
rough,
at
dude.
the end of the week. Yeah, I feel great. I'll crash hard
Yeah.
after this though. Probably take me a little 3 hour nap before Forex Fire and just do it all over again.
That sounds about right,
Good stuff.
honestly.
Yep. Um,
Ah,
but yeah, speaking of gold, yeah, I was looking at this 15-minute demand zone here, and so yeah, just going back down to let's go down to a 1 minute here, and then I also observed before I get to that um, supply zone overhead. I think I looked at that on a 1 hour. Yeah, so just basically use this as a supply zone. I mean, as a supply zone. So cover my position just ahead of it. So yeah, just going back down to the 1 minute time frame. Let's see here. Yeah, so right here is where I was preloading the trade. And as you can see, I got in here. Well, I was waiting for price to hit my zone, so it didn't even hit my zone. Mm-hmm. And thankfully, when it hit it got a nice little fat hammer candle at the bottom, and it came within. Yeah, I mean, it just came within, a tiny bit of stopping me out, but about 10 pipettes or whatever. So
yeah.
But after that, it just went up nicely. The buyers took over, and I ended up getting out just ahead of that supply zone, just in case it, smacked it back down. So got out right before it. Obviously, it would have went a little higher, but I take what the market gives me. So yeah, I think I got it. Yeah, got that one, and then let me see here. I did also. Oh yeah, dollar Japanese yen. This one was a short sale. I was looking at that little supply candle there before that big spike down, and I was also getting a little bit of divergence on the increase in price plus the decrease in RSI. So I was getting a little divergence there. So I felt pretty comfortable about that. And then we had the, what was that report that came out? So that was 7:30. So we had the unemployment number came out, and it was obviously pretty bad for the dollar. Had about 9,000 additional unemployment claims than projected. So it spiked down pretty good and kind of got close. Well, it actually did tap into this demand zone. So when it did that, it just kind of slingshotted it back up and got in on that trade. Let's see here.
Yeah, what I was going to say was that number, that unemployment number, it relatively speaking, 9,000 is 9,000 jobs. That's a decent amount of jobs to be, to be in the negative by in terms of expectations. But at the same time, compared to some numbers that we've seen in the past of being off in terms of expectation, it didn't feel like it was that much of a big deal at the end of the day. For the equity markets, it didn't really do anything. It didn't matter really much at all. So with the currency, it made a decent move. Had the dollar move decently off of that, and did it correct or anything or no?
That for the dollar Japanese yen, that's really not a big move at all. Because it did move 20 pips in that minute, but keep in mind the dollar Japanese yen, it's the highest move. It's the fastest moving. I should say the highest ATR of the major currency pairs, because it moves on average about 120 pips per day. So yeah, relative to the ATR, it's really not that big of a move, but yeah, I felt pretty good because the dollar Japanese yen is still my most bearish currency pair right now when looking at my top setups as far as all my economic data. It's still giving me it's giving me a -8. So again, -5 or less for anybody in the chat. -5 or less is a bearish sentiment when you add together all the economic data, the PMI data, the CPI, the inflation data, the employment numbers, interest rates, retail positioning, seasonality, all that, GDP. So that's still the most bearish one. Now, Canada dollar Japanese yen is now on my list, as well as Canada dollar Swiss franc. So those are the only two items that have joined my list, and those are, of course, in the bearish bias as well. And then my euro dollar, which was bearish the last couple of days, it's actually off my list, so it fell back down to neutral. But yeah, so that's why I felt pretty confident about jumping in right there. I had the fundamentals in my favor. And yeah, I just felt pretty decent about that zone. Now, it wasn't the sexiest of supply zones because it's kind of out here in the middle of all this choppiness. But I had observed that we had a pretty good volume spike with the formation of that zone. So, that told me there was a lot of interest right there. So, let me see here. I want to see exactly where. Okay. So yeah. So, and the other thing too is it had bounced off of that zone I just showed. So I kind of felt good about it rolling over after hitting this zone up here on the higher time frame. So that's why when it created this secondary supply zone, I just took a quick scalp at it. I wasn't going for anything too much, since it is such a smaller, fairly narrow range. I mean, that was only about a six pip wide range on that supply. So, but yeah, I got that secondary drop in price and just felt pretty good about it. So yeah, just going back to my 1 minute time frame, sold there, and then I bought to cover just ahead of the demand zone underneath. That's right on that candle right there. So just again on both of these trades, I just took what the market gave me. I wasn't going for anything too crazy, and obviously it touched that demand again, and as you can see, everything reversed. So nailed it. Yeah, just nailed that take profit like within about three pips or so, and that's when everything reversed. So yeah, definitely exciting coming down to these smaller time frames. Like I say, I used to trade them all the time, the 5 and the 15 minute, but being away from it for so long, it's taken me a couple of weeks or so just to kind of get back into the groove of these smaller time frames. But today was a very good sign, so I'm happy with it.
Yeah, awesome.
And most importantly, Paul, there were about 2 or 3 other trade opportunities that I was looking at that I ended up avoiding the trade. So I stayed safe on 2 or 3 others. So I count those as wins as well. Moral victories, if you will.
That's big time. Yeah, that's undoubtedly big time. Avoiding losses is just as great as capturing the wins in my book too. So I 100% agree. We do have we got a bunch of people in the chat here. I just want to say hi to everybody. Curve Trades, Liquidation Lab, like always. Spasm, Market Sniper. Okay, I think you're new here. It's good to see you. I haven't seen you before. That's awesome. Thank you for being here, and smash the like button if you can, and give us a little subscribe if possible. A little bit goes a long way for us. We really do appreciate it. If there's anything you guys want us to check out, in this late night session, we are more than willing to. I also want to say hi to Solomuzi. It's nice to see you there. I haven't seen you either. New to the chat here. Coach Tiger, how did the AUD JPY yesterday trade work out? Okay, so he must have been tuning in for the Forex session, which is sweet with you.
Yeah.
Awesome. Good to see. But yeah, so how did that work out?
I didn't get into an AUD JPY. Let me see. Let me refresh my memory, see what we were doing on that. Let me. I don't think I got into that trade. No. It might have been Aussie dollar, New Zealand dollar, maybe. Because I got into that for a small loss the other day. But let me see. If I go down to a smaller time frame, looks like I was. No, I definitely wouldn't have been trading that. It's too ugly. Yeah, I don't know. I don't have a play on Aussie dollar, Japanese yen. It's a neutral asset right now, meaning, yeah, it's a straight up neutral. It's a score of a 0. So that's a coin flip. Not really getting benefited by the sentiment, meaning the retail positioning. A lot of neutral. So yeah, no, I'm not sure. And I did get into an Aussie dollar, New Zealand dollar. Let me see if that might be the one he was talking about. What did I do? What did I do on that one? I can't remember. Somewhere in here, I got a small loss. I just can't remember exactly where it was at.
Yeah.
But nevertheless, yeah. Sorry, Solomuzi. Yeah, I don't know what you mean by Aussie Jap. I probably talked about it, but
right.
Yeah, I don't have a play on Aussie Jap.
Yeah. Well, I will say on the ES and the NASDAQ right now, there's a little bit of a fake out occurring that, remember our conversation on Tuesday, that kind of like
Mhm.
half bat trade that Michael was talking I can't remember
Yeah.
exactly what he calls. That's essentially playing
Yep.
out right now. So, um,
Yep.
so yeah, it's kind of funny. Like this happens a lot more than people think. Like people don't. I feel like this is an underestimated formation, like structure formation that occurs in these markets.
Hmm.
This like this look of despair with the markets like dropping sharply, and then that bounce with the rounded edge, and you think it's going to go lower, and then it fakes you out. That goes back to the upside before even making a double bottom. People
Hmm.
underestimate that formation. I feel like so many, like including myself in the very beginning, like without knowing as much as I definitely do now, um, it looks like it wants to continue, but you have to look at like the order flow more and understand that the sellers just dry up a lot of the times in these moves, and then buyers just come in and just literally lift the offer and start stopping out the weak shorts, and then you break upwards. Um, it's just an interesting one. I just love the formation so much. I see it all the time, and I got to learn to take the long side of it more on when it rejects the continuation of selling. Got to learn to get long that more. I can see it all. I see it. I can see it all I want, but if I'm not making money off of it, that's a whole other situation. So
Yeah.
at least I can avoid the
Yeah.
short, like you said about avoiding losing trades. I avoid the short a lot of the times, which saves my butt. But
Hmm.
it, got to start taking the long now, and making some money off of it. So
Yeah. Yeah. And I mean, and that's part of the reason why I put alerts on zones that even if I'm not going to trade them. So yeah, I was thinking about this yesterday. Um, a lot of zones that I know are zones by definition, but maybe they're in a chop zone. Maybe they're too narrow.
mm,
Maybe there's too much, commotion to the left. Um, I
mm,
I like to still watch them because the way I see it is this: even though I know I'm not going to trade it, it's still nice to be tempted by it, so that I get better and better about sitting on my hands and growing that
right.
patience. I don't know. That's just me, but I find it a great way to exercise my patience. Just sitting and
Mm,
watching those zones on a 1 minute time frame or a 5 minute
yeah.
time frame. I don't know if that makes sense or not. Maybe I'm a weirdo like that, but it does. It really helps with the patience.
Yeah, no, not a weirdo at all, my friend. Definitely not. Yeah, learning
Um,
patience is that's a whole other skill, that's for sure. I did see that we have a comment from Solomuzi asking about if you don't mind me asking, what is the strategy that you use to approach the markets? Okay, so what I can do here is I'm going to, we'll share my screen. I'm actually setting some levels from this previous trading day range here. Let me just set these levels really quick, and then I can go through exactly what I do. Okay, that one's
yeah. Well,
done. And
while you're doing that, I just wanted to mention real quick. Yeah, I had
yeah,
I had an alert set here on the Nikkei, but as you can see, it ran off without me. I was looking at this 4 hour demand within this daily demand. That's what I was showing was a 1 minute time frame. Yeah, it just hit and took off because I was in the middle of playing
mm,
with the stream. So
right.
darn it.
Son of a
Oh
gun.
well. Yeah. Moral victory, right? Just means I'm picking some decent zones.
Yeah. No, yeah, for sure. All right. So we can switch to over to me now. We can switch over for sure. And I can
Yeah.
show my screen here. So to start off, I combine a couple of things as like my foundational structure to my trades. First of all, is I need to have active order flow data. So I use a third party software that allows me to look at order flow data literally as I'm minute of a scale as I need, down to the second. So looking at aggressive buy and sell orders, essentially the deltas coming up each minute, each 30 seconds, each second, whatever I want. So order flow is really important in real time for me to be viewing, to just gauge buying and selling pressure at any point in time that I like. And then secondly is I mainly follow time price opportunity structure, or what you could just more broadly call market profile structure. So I'm looking at the previous day, the value area, which is the 70% of area in which that day traded within, with that volume and time traded within. So what we're trying to do is just really understand, like, if the day trades, what kind of distribution does the day trade within? Did yesterday's regular trading hours trade in a more standard distribution, which would equate to more of like a range day? Did it trade in like a double distribution, which would lend itself to be more of like a trendy day, where we spent some time in one area comfortable with price, and then it traveled down or up quickly to then be comfortable in another area of price? Did we simply just go up or down like in a grinding fashion the whole day? Did we just trend in one direction the whole day? Looking at these different types of distributions and understanding the area in which value was created, that's 70% or 68% of volume and time spent in certain areas, is what I end up basing a lot of my trades off of the following day. So what I'll set is the value area high, the value area low levels, and then the point of control of that day for me to look at for the upcoming day. And then when the morning comes for that day, I'm looking at where are we opening in relation to that area of value. So are we opening within the value area? So are we opening by like the point of control of yesterday's trading day? Are we opening above value area high, below value area low? These things can kind of tell you if the market is maybe leaning a little bit more bearish, a little bit more bullish, a little bit more neutral. And you've got a relative guardrails to understand, okay, if we're opening like below value area, for example, I have here as an example, value area low at 63.81 on the previous, earlier today's trading session. If we opened tomorrow morning at 63.74, that's still within, this previous trading session's range. But what we could see is maybe like you could start thinking of scenarios. Maybe we retest the value area low to then fall, continue the bearish downwards trajectory, or maybe you look for a pop back into value area from the previous day, and then look for support at the value area low to rotate into point of control or through to value area high and retest it. There are just many scenarios, and essentially using those three levels for me, a lot of the times sets good support and resistance areas that I can, make trades off of. And then I use the EMAs. I use the shorter term EMAs, the 9 EMA, the 21 EMA, and the 50 period EMA on the 1 minute and 5 minute charts to judge trend and momentum. That's about it. I've been studying market profile and TPO stuff along with like auction theory for a long time now. And that's my general structure. I don't have like indicators aside from, I guess you could consider volume an indicator. But volume and the EMAs are really the only like indicators I use. I do have VWAP up on the chart, but I don't use it terribly often. I kind of just use it as maybe it'll come into relevance, here and there once in a while for me. But yeah, if it's like super obvious that like VWAP is being respected as a support or resistance level, I'll consider it, as relevant to whatever trade I'm possibly getting into. But aside from that, yeah, it's a lot really structure oriented, like extremely structure oriented in terms of just where auction prices are finding comfort. That's really how my strategy is based. It's a very nimble, a very like nimble strategy of sorts. It gives you a lot of opportunity, in my opinion, and I think it allows you to understand the minds of the longer term traders and the shorter term traders, what they're thinking on a day to day basis. So yeah, that's a
So
really
for
long winded response, but that's my strategy.
No, for somebody breaking into futures trading for the first time, what's do you recommend they start off by kind of learning and studying up on auction theory, or what would you recommend, like as a kind of a starting point?
I personally would. I mean, market profile. I think learning about market profile to me is one of the core things that anybody should do if you're looking into futures trading. Honestly,
Mm-hmm.
you could look into it for most styles of trading. You could definitely be looking into it for like equities and bonds as well and stuff. Like it's not just for futures. You can use it for other things that have like more
Mm-hmm.
structured time frames in which they trade. Forex, I'm not quite sure, to be honest. I don't know about Forex, but Forex futures you probably could, but don't quote me on that. I haven't really ever like dove
Mm-hmm.
into the currency pairs with it, but yeah,
Yeah.
because the whole point is just understanding the distribution of volume, like being traded, along with the amount of time in which the volume is spent, like traders are spending in those areas of volume. Like it's a
Mm-hmm.
really simple idea. I've gone through the auctioneer example too many times to continue to make the example, but you just think of a physical auctioneer process. Like if you were going to like a genuine physical auction for, let's say, furniture or something, I don't even know, like or cars or
Mm-hmm.
whatever, like you just think about how the auctioneer conducts the business that's required and the the bidders in the crowd. Like think about all the
Yeah.
possibilities in which price has to be adjusted in order to attract demand or to appease demand. So,
Mm-hmm.
yeah,
Yeah.
but yeah, I would
Um,
recommend it.
yeah, I would recommend that for everybody. Like when you're, regardless of what you're starting out trading or learning, it's obviously the sexy thing to do is to jump on a chart and try to look for different prices. If you just take a step back from a 30,000 foot view and just learn how the markets work, like Coach Paul explained, market theory or supply and demand. I mean, that's basically supply and demand. Just understanding the
Mhm.
basics of supply and demand, and the kind of the fundamentals behind charts, accumulation, distribution. If you could really dig into that up front, then by the time you get to the charts, it'll all start to make a lot more sense. Because now you'll
Mhm.
understand why prices moving up or moving down. You'll understand how these filters work as far as indicators, moving averages, et cetera, et cetera, et cetera. So, yeah, that's a great starting point. Just kind of get the basis, the core strategy out of the way, so that the charts make more sense. I don't know, does that make sense?
Mhm. Right.
Yeah.
Yep. Yep. No, for sure. And Liquidation Labs, by the way, complimented your hair. He said, "Nice haircut." I agree, man. I liked it. You got your haircut like it was last week, right? I think I mentioned it. I was like,
Friday.
yeah,
Friday.
yeah, okay,
Yeah,
yeah,
that's Friday.
yeah, yeah,
Last
yeah.
Friday.
Looks good. His
Yeah, it's
comment, his third
it's
comment, it's a little unhinged, but
yeah, I got
look at the
if I combed it over
yeah,
my face, it was getting down to my mustache. So, yeah, that told me it was time
that's
to
funny.
get there and get it cut. Ah, liquidation
Uh,
lab. What are you talking? Yeah, I don't think we're doing a giveaway today, liquidation lab. Um, I feel like they're starting to get a little more so with the main course, the main sessions, Forex Fire. Obviously, Paul's. Did you guys give away one today, Paul, on your session? I think you
We
did, right?
did we did give away one, yeah,
Yeah.
25K challenge account.
Oh, okay.
Yep.
So yeah, as far as I know, I don't think we're giving one away today. But yeah, stay tuned.
Yeah.
They like to sprinkle them in here and there. You just never know.
Yep. And I didn't even realize Coach Michael's in the chat. All right. Yeah, he said it is.
Michael,
Yeah, like when I was mentioning the pattern, and he was like, "It is." Like he was
it's a fake M.
confirming. I said, "All right." Yeah, it does look like it has the you can see on the chart here. It's actually forming. It is starting to look a little bit more like I'm starting to see more confirmation of a possible move to the downside, maybe a break. I mean, the EMAs are holding up as support or as resistance. Apologies. The only thing that holds me off right now from taking the short off of like one of these EMAs, especially if you look at like the 5 minute here, I'd be taking a short off of like on the NASDAQ, the 23,207 ish area to 23,213 area. That's where I would be wanting to take a short. But the only thing that's holding me back is that on the ES, I'm looking at the bid offer ladder, and I see a ton of sell orders stacked above 6,400, and I'm just contemplating whether or not price is going to want, like, overnight market participants are going to want to try and just get up there to see what the appetite is like, whether or not some of those orders are iceberg orders, or whether they're just kind of like weak offers where people are just getting out of longs, and maybe can chew through it to make a little bit of a run to the upside. But yeah, that's kind of that, along with we do see some larger, more aggressive buying than we're seeing aggressive selling at the moment. So every time we're trying to get to the highs of this area, every time we're rounding out or like bouncing up, I'm seeing aggressive buying at the tips, which isn't good for buyers. But then the sellers can't like reject price enough to get buyers to, get out of their positions, and then it just bounces back up again. So I'm a little weary in taking that short, and possibly that H pattern or half bat pattern fully coming to realization, and it just spikes up in our face and stops us out of the short. So definitely just going to stay away from it, unfortunately, for now. It's already 9:36. We're a half an hour into the session already, and I want to be in a trade, but my discipline is telling me stay away from these two for the moment. Maybe it'll change in the next, 20 minutes or so, but let's see what gold's doing, I guess. Let's check it out.
Still a 7 on my scoring.
And then Solomuzi asking, what do I do after a bad day of trading? Good question, man. We have talked about this in the regular trading hours. Actually, the last couple of days we've mentioned it a couple times, a couple of stories. But usually after a bad trading session, you just gotta, for me, like, I just need to go outside and walk. I just need to, like, the kids would say nowadays, I got to go touch grass. I got to get outside, get some fresh air, just, clear my brain. I'll take a hot shower, just relax a bit, gets the blood kind of pumping a little bit, and but outside of the charts, just get your eyeballs off of numbers and screens, and focus on something else. Just be productive somewhere else for a little while to take your mind off of things, and to be able to get be refreshed for the next day. And depending on how bad of the loss, we were talking about like historically bad losses a couple days ago, and I've taken a week off. I've taken like a week off from trading before. I've taken 2 weeks off where I just complete reset, just get away, just be away from the screens at all cost to simply
Right.
reset everything that I'm thinking about and be super fresh for when I come back. I mean, the markets will always be there. Not that you shouldn't be watching them regularly to a decent bits, and studying them or studying whatever you need to study in order to put together a strategy or what have you. But sometimes you just need that clarity to come back to you by getting away from the screens. So
Yeah. 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 No, I mean, like even on Saturdays, I mean, Saturday, and Michael agrees, Coach Michael, because he does the same thing. Saturdays, I get the heck away from everything trading related. Just don't want to look at the charts. Got to have that day at least one day a week to just reset. I'll still keep an eye on some of the fundamental stuff. So, obviously what's happening on whatever, Yahoo Finance, or just whatever the news of the world is for the day, just to keep abreast of that. But yeah, whether it's a loss or just taking a break to reset yourself, it's vital. I love the fact that I have a patio here, and I live on the 3rd level. If I go to my patio, I can sit outside, and there's a pond outside with a sprinkler. Just sitting there and listening to the sprinkler go, just kind of as a perfect reset. I usually do that in the mornings after my stream is over, my Forex Fire stream. Just get out there, get away from the charts, sit and listen to the water. Oh, it's the best reset ever. I think I mentioned it a couple of days ago. Ultimately, it's easier said than done, but ultimately you want to get to the point to where whether you have a big winning day or a big losing day, you don't want it to affect you either way. Now, again, that's easier said than done. That takes a long time to get used to, especially being newer and, in small amounts or even large amounts of money for the first time. So, but yeah, I definitely agree. Just take a walk around your block or something. It's the best thing to do. Get at one with nature. That'll help reset you and clear your head a little bit.
Yeah.
Or exercise.
Yeah. And you'll learn a lot about yourself, I think, when you do take I think taking a loss on like your cash, maybe your cash account, or whether it's your funded account or a challenge account or your cash account, taking losses on those different types of accounts and how you feel after them will definitely speak the truth about your current state of like being a trader. Like you have to come to the realization, like when you have an emotion, like when you start having like heavier emotions from like a loss or like a certain level of loss, you do have to be real with yourself and understand like, okay, I feel a lot worse than I thought I was going to feel after, let's say, a $700 loss on the day. I think I need to tone back the position size that I'm trading or the amount of trades I'm making on the day, because emotionally I'm not like prepared for that kind of loss at the moment. I'm just like, not that you won't be at some point in the future, but sometimes you just have to be real with yourself and understand, okay, well, maybe I can't be trading a mini on the ES every trade. Maybe I do have to trade like 3 micros, and then instead of losing $700 on the day, it would have been $250 on the day. And then you don't feel like, terrible, like you're making such, bad trades or anything. It's a whole mental thing. It's a big mental thing. And eventually you get used to it. Like you said, eventually, like the losses are going to come, but you also know that the winners are going to come with them, and your win percentage versus your risk reward strategy will ultimately play out in the law of larger numbers. So yeah, it's just
Kind of
the gist.
I've said it before, but the easiest way to lower stress is just cut your risk in half. I was taught, when I went to my online trading academy, we were taught whatever your broker allows as the cheapest you can wager per trade, do it. Start off and have 10 trades or so, at the smallest, whatever they allow you to risk. And then when you get bored of making money, then you can just up your risk at that point. That was the way they worded it. So yeah, when once you feel comfortable with that, step it up. 0.01 lot, okay, 0.02, up to 0.05, up to 0.10, 0.5, one lot, that type of thing. Just starting off and kind of stair stepping your way up, because I think that's what a lot of people do wrong, is the opposite. They're jumping right in with 1 and 2 and 5%, or even 10%. I think we had somebody on here a while back, remember, with the Bitcoin trade. They won $150 on a $500 account. So yeah, that's an immediate red flag. So you should be doing the opposite. Go with whatever the lowest amount your broker allows. And yeah, again, when you get bored of making money, that's where you start to slowly increase your risk.
Right.
And it's a lot less stressful. I mean, I know I've had to do it. Because before, I was one of the worst about risk management on my previous brokers I used to have, because they're not like the brokers today where they calculate every little pip, every little percentage, every little dollar value for your stop loss, your take profit, et cetera, et cetera. Yeah, and I inadvertently was wagering 3, 4, 5, sometimes 10% of my account per trade. I don't know how I didn't blow that account. I finally did blow that account, but it took a long time. And that's without even paying attention to my risk management. Imagine if I could have just paid a little more attention to it. But hey, that's everybody. You have to blow an account. That's like a rite of passage, right, Paul? You got to blow at least 1 or 2 accounts, before you really learn your lessons.
Right. As a beginner, like the pain will usually come at some point. And like we were literally just tying into what I was saying earlier, like then once the pain comes, you'll learn a little bit about yourself and you'll get through it, and then you'll get another account or what have you, and you'll be better the next time around. But that's just something you need to learn about yourself. How you react to those situations. The losses, there's a lot more learned in that like blown account or whatever than some people would like to think. So not saying you should do it if you can avoid it.
Yeah, we can preach that till we're blue in the face, but until you actually go and fall on your face, that's when the real lessons start. Right.
Exactly.
Yeah. Good stuff.
Where
are we at here?
I'm just refreshing the stream real quick.
Yeah.
All right. There we go.
Right.
Cool. Do you have a personal account? And if yes, how do you approach them differently? I do have a personal account. And I don't swing trades, and I do have a personal account. And I do not, the only thing that I would approach differently, like from a challenge account versus at Hola Prime versus my personal cash account, is the risk to the risk management is slightly different, because my cash account, I have a lot more what's the word I'm looking for?
Leverage?
I have a lot more room. Like I'm not, for example, like in the challenge account, like with the 100K one step prime challenge account here, the rules are to trade within, you can't lose 3%, so $3,000, and you're trying to make 6%, so $6,000. With those rules in mind, at max, even though I'm allowed to trade, I think it's up to 10 minis. I'm not going to be trading 10 minis, obviously. That's just so much. If anything, I'm trading a maximum of about 2 minis. 3 minis would be like a specific situation where I know the maximum risk on whatever trade setup is occurring is like 2 points. So at max, I'm risking $300, which would be about 10% of that 3,000, which is already, a decent bit to risk in a 100K one step, challenge account. But usually on my trades, I'm in this challenge account, I'm only willing to risk about, $150, $200 max on a trade to just give myself more time to let, I was saying, the numbers play out. Let the 60 to 65% win percentage rates versus the 1.5 to 1 risk reward probability structure, just to let it play out. If I could have a run of 5 losers, but then the next run could be 7 winners, and I just can't be risking enough to where 5 losers completely drops me out of the challenge account. So
Yeah.
so that's the difference, is I can stomach more of a loss in my cash account more than $200. I can risk $400 on a trade, no worries in my personal. But different on a challenge. On a live funded account, it just depends on how much capital. Like, to start off, I would start off a little bit slower with lower position size and whatnot, but depending on how much equity I'm able to raise within the live funded account would then be my position sizing would evolve from there. So yeah.
Mm-hmm. Yeah, you just got to be a little careful on the challenge accounts. I mean, good idea to kind of build up those profits, and that way you don't have to sweat the drawdowns as much before pulling out your profits. So
yeah.
I
don't know if you see this, Coach Coach Tiger. I don't know if you see this chart here that I've got up right now. I know it looks funky, but I've got the 10-year. I've got the 10-year bonds up. That's why the 10-year bonds trade awfully weird. But I have it up because if you look on the 1 hour chart, we kind of, number one, we made sort of this double bottom here where we could be, reversing back up. So I was looking to possibly buy, but the whole thought behind the 10-year is you got to start thinking okay, well, tomorrow with the Jackson Hole Symposium thing, what if there's a little bit of a change in heart of what's going to happen in terms of cutting rates or maybe keeping them the same or whatever. So that's going to affect this big time, this product big time. So, but maybe I'll get into a trade in that tomorrow.
And we're down to 75% chance of the rate cut now. Wow.
Yeah, we looked at it earlier on the earlier session. I was like, son of a gun, it's coming back in a little bit. Next thing you know, it's going to be 50-50.
Yeah, I was watching Kevin O'Leary, Mr. Wonderful. He was talking on Fox Business News, and he swears up and down they're not cutting. That's what he says. So, when somebody like him says that, okay, I kind of tend to listen to somebody like him. I mean, he knows this stuff. So I don't know. We'll find out.
Yeah. And you see a lot of Fed members being all wishy-washy. There's so many headlines about Fed members saying, "Oh, the data is unclear. There's a lot of contradictory stuff." And then there's some Fed members that are like, "Yeah, we still need to cut one 25 basis point cut," and then others are like, "No, we don't need to do it at all." And it's just so mucky, and it seems so neutral. It's one Fed member comes out to say the one thing, and then the other one comes out to say the opposite thing, to be to keep the Fed neutral, and and nobody knows what's going to happen. So I feel it doesn't feel like we should be cutting really, unless they just preemptively know that inflation data is likely. There's no trend at the moment, I think, in inflation, but maybe they're just trying to front run a possible trend that they see occurring because of the tariff situation. But I don't know. Beats me.
Yeah.
Beats me.
Yeah, I mean, I don't know. It's you could really make an argument either way, to be honest. I mean, inflation. If you look at it over the last year and a half, I mean, it's just very, very, very slowly and very subtly kind of trended down. I mean, as slow as it gets, because I'm just looking at it over here off screen. Actually, let me just copy and paste this over back in, if you don't mind. You mind if I share my screen real quick?
Oh, you're good. You're good. Gold is taking a little bit of a dump right now. It took a $5
Oh, okay.
dump in the last few minutes, but I'm just watching that. So
Oh, okay. Yeah. No, I'm just gonna share the little bit of a chart of the consumer price index just to get an idea of what it's been looking like of late. I'll just throw it here on my gold chart. But yeah, this is this is since January of 2024. Yes, it has been going up over the last couple reports, but when you look at it in the context of the overall move since January of 2024, like I said, it's just very slowly, steadily going down. I mean, not guaranteeing that it's going to curl around like it did up here and like it did up here, but yeah, obviously the target is too, but I don't know. I mean, obviously that July reading for the June data was quite a spike, so I could see where they'd be getting a little antsy with that. But yeah, there's so many different arguments. I mean, one argument I heard is the real wages growth is somewhere up in the I can't remember what the number was, 5% or something, to the 2.7% inflation increase. So you're still putting more money in your pocket when you look at the real wage growth. But yeah, then you start to look at things like the jobs data that we had that just came out. Let me just go take another peek at that. That was the jobless claims. Yeah, so like the jobless claims number spiking. So that's, I don't know. There's so many. It's got me all twisted up. But this is why I always kind of come back and say the good thing about trading is we don't have to be an economist and we don't have to be Nostradamus. Whatever happens, happens, and then we just look at price action and latch on after. That's
right.
The beautiful part about it. I mean, it's the more complicated we make it. Coach Darrell said it perfectly in his shorts video that he made recently. Just keep it simple. Quit trying to add all the information and all the different stories and indicators. Just keep it as basic and as simple as possible. That's why I just love the top setups. Having everything calculate out. Oh, great. Nikkei has a +7. Gold has a +7. Silver has a +6. Great. If it's in an uptrend, let's go buy a pullback. Like that's as simple as I like to keep it. Yeah, I do dig into the data quite a bit to try to find patterns and what happened the last time this report went up this much or went down this much. I even get into the weeds a little more than I kind of preach, I guess you could say. But the more complicated we make it, paralysis analysis, the bigger chance it is for us to flub up. So, but anyway,
that is
thought I would share that.
No, that's the truth. It's one thing to just naturally be curious, but there's another thing to where if you start tying it in, tying too much in, it can get a little wonky. But naturally being curious about a lot of that stuff, I think, is like a different kind of situation. But But yeah, no sleep narrator talking about gold. He's like, I knew it would go below 33.30. Call me Ivan Boski. What a pull. What a name pull there. That's pretty great, actually. Infamous.
Did you want it back on mute to look at the gold? Was that what you were looking at?
Oh no! I was just reading his comments.
Okay.
I just saw it in the Ivan Boski.
Who's that?
Reference poll. Just a famous insider. He had a really famous insider trading scandal. I'm sure there's a good article to read on it. Yeah, okay. Pretty infamous.
I'm going to write that name down so I can look it up. I'm sure YouTube might have something on it. Ivan Boski. I like documentaries and real stories like that, so I'll be sure to go check it out. We watched the Bernie Madoff documentary that came out, I don't know, several months ago. That was some crazy stuff.
Isn't that? Yeah, it is crazy, man. How he pulled the wool. Well, I guess there are people that still don't believe that, but that he, his kids. People think that his kids were I think the way that they made it seem was his kids weren't in on it.
Yeah.
or that the kids didn't, or like his son didn't really know anything about it. But then, but there's a lot of people that are like, "There's no effing way, there's no
Right.
way that he didn't know," or like,
Well,
but yeah, it's yeah.
if I remember right, didn't one or both of them commit suicide? I don't,
I
or,
think yeah,
who did?
yeah. I think one did. I think one did. Yeah, yeah.
Just
So
wonder. Yeah, I don't know. It's pretty sad, but wonder
it
if
is sad,
that's
honestly.
might have told the story.
Yeah.
Who knows? But
Right.
well,
Right.
I'll just go over I'll just go over my alerts real quick. So a couple of the ones I'm looking
Yeah.
at, like I said, gold and silver. Yeah, gold as always. It's just been kind of overall still in that sideways trend. I kind of put these blue rectangles above and at the bottom, just kind of connecting a lot of these or swingy type points. I'm still just waiting for that to come out, but
Mhm.
I am kind of keeping an eye on this 4 hour demand down here. So not a whole lot's changed on that. The one thing I did decide to add on to here was if I go all the way down to a 5 minute, I did have a demand zone kind of peeking out just above that. So it's right at the 3,300 round number. So I wanted to point that out. Kind of a zone on top of a zone. That's kind of how I'm treating this. If I zoom in. So yeah, obviously this rectangle at the bottom was that 4 hour demand zone candle. But looking at it on a 5 minute, I do have, let me turn off my order block. Do have this also, this red candle down before that big spike up. So I just decided to turn this into a zone on top of a zone. And that way I incorporate that. Now the question I'm asking myself is, if I get it, if price comes down, obviously that would by definition be a shorter term downtrend. So what I mean is I feel comfortable buying on the 4 hour demand, but the question I'm asking myself is, do I feel comfortable taking a stab at just the 5 minute candle and putting a stop loss under that area, right? So this is the dilemma that I'm facing. So I would like to just get into a trade with a stop under there so I can have a really good RR attempt. But if price comes down and doesn't give me any type of a bullish signal, volume spike, that sort of thing, then that'll be an easy choice. I'll just incorporate the 4 hour demand zone and put my stop loss below that. So because you look how strong that is, I mean, you could very easily see price just rejecting hardcore off of that and just going up and just totally, running off and leaving me as far as the rest of the demand below it. So that's just kind of something I'm interested to see what happens whenever price does finally come back to that zone. And not only that, but it's the 3,300 psychological number at the distal line of that demand zone. So that definitely makes me interested in trying to increase my R&R, bring my stop loss up there, and then, have a better trade, because obviously you incorporate the whole zone and that's going to dramatically shorten the R&R. But even if I incorporate that whole zone on top of a zone theory, then, let's take a look here. So basically get in right about here, stop loss down here. So that'd be, we'll just call it 23.25, 246, 69. So 70, I guess, would be a 3-to-1. Okay. So that basically puts me right about here, right here at this little miniature swing high point. So I'm just going to leave that up there. But yeah, that's kind of where I'm at. Like I said, I'd really love to increase my R&R and put my stop below that 5 minute zone. But if I don't get the look I want, then obviously I'll incorporate it all. So that's just kind of something that's on my mind when it comes to this gold opportunity. But again, it has given me a bullish bias. It's given me a score of a 7. So pretty happy taking a stab at that whenever we get down there. So that's kind of my thoughts on gold. We'll just wait and see. Silver +6. So that's giving me a bullish bias. Oh, I forgot. I put Zagnut bars on here because I call silver Zagnut since it's
Dude,
XAG.
gotta try one. I gotta try one of those. I mean, I don't feel I've never seen one in my life, but I have a
Oh,
feeling
there you
that
go.
they, like something odd like that might, like not normally in this like region. Maybe like Cracker Barrel
Mhm.
has them or something. Like I could see like a Cracker Barrel having,
So,
that candy bar.
so here in Kansas City, we have a Bass Pro Shop. I don't know if they have them there.
Ah,
They probably
yes,
have them
yeah,
there,
yeah, yeah, yeah,
like Bass
yeah.
Pro Shop, Cabela's, those types of stores. And let me see this. So yeah, this one is Bass Pro Shop, I think. Yeah, Bass Pro Shop. That's the only place in the Kansas City area that I found them, and they just randomly have them in, when you go to check out. They're at their little their little candy bar aisle, right there at Bass
Hmm.
Pro Shop. They're so scarce. They're so rare and hard to find. I don't know why they're so rare these days, but I love them. I mean, it's
You
peanut
need.
butter. It's like it's kind of like cornflakes, and then it's got toasted coconut inside. Ladies and gentlemen, that is the best candy bar in ever, in my
You need to
opinion.
go buy them, like buy them out, like go to whatchamacallit, go to Bass Pro Shop and buy them out like every so often just to make sure that they're staying in business. Like the candy bars will continue to be produced just for that sake. You need to go buy like 20 of them every time you take a
Yeah,
stroll to a Bass Pro Shop.
yeah, that's not a bad idea. I'll
Uh,
have to remember that. um, yeah, no, they're good. Butterfinger, I always grew up on Butterfinger. That was my favorite until I ran into a Zagnut for the first time, and that's where I fell in love with the Zagnut. And it's all from
yeah,
Beetlejuice, the movie Beetlejuice. Hey, you,
that
come here.
oh okay.
You got something for me? Something to munch? The fly says. Yeah, no, it's the
That's so
best.
great. Oh man.
Silver. Yeah, trying to find a bid on this. Looks like I missed out on this opportunity because I was in the middle of, yeah, so I was in the middle of playing around with that gold trade. So silver, hit a zone at the same time. So I just took the gold one to focus on it. Silver, let's see, silver, what was this? Oh yeah. So silver was this little zone here, that I was looking at. Didn't really have the sexiest price action leaving that zone. So I think that's ultimately why I skipped it, because I was more focused on gold anyway. The gold setup just looked way better, but still worked
Mhm.
out despite the fact it didn't really have much of a fair value gap, meaning it didn't really show much strength. Zones are still pretty potent, even if they don't look the sexiest. But yeah, I only like the best. But I do like this
Mhm.
zone a little further down. If we get a retracement at some point, I believe I was looking at that more on, 30-minute level. So that's really nice. I got some really good volume spikes coming out of that. That's probably a decent setup. I don't know. Let me look. I haven't looked at this most recent leg over here yet. 10 minutes. Eh, maybe. Might keep an eye on this one. I'm not. I don't know. I think I'm actually going to
Yeah.
keep an eye on that just to see what happens if and when price returns. Again, this, if nothing else, will be one of the zones I might just end up watching, just to strengthen my resolve, right? To avoid trades.
Mhm.
It really as silly as it is, it really does help just to sit there and force yourself to watch a 1 minute chart at a zone, and not take the trade. It really has helped me out, which is
Yeah.
why it was so much simpler to take those 3 or 4 other setups I was watching and just sit on my hands. Because it's real easy. Man, it's easy to get in on a 1 minute spike. Well, but then you look at it on a 5 minute or 15 minute, it looks ugly.
Mhm.
So that's essentially what I'm doing now that I have my premium members. Well, now that I upgraded to the higher membership, is I have on my 4-way. Actually, I'll just show it real quick. Hey, let me save this real quick. Save. But yeah, now I'll just go over here to my 4 chart setup, and I'll put a 1 minute over here on the left, 5 minute, 15 down here on the left, and then something like a 30 minute or a 1 hour. So in other words, when I see price on the 1 minute and I get excited about that candle that might reverse or give me a good spike reversal candle, okay, I'm now going to look at the 5 minute. How good does it look over there? Does it look good over there? Okay. How's it look on a 15 minute? How's it look on? So the higher the time frame you go, the less exciting it gets. So in other words, it's just, this is partly where the multi-time frame analysis comes in. Just because something looks sexy on a 1 minute doesn't mean it's going to look the greatest on a 15 minute. Doesn't mean it's going to look the greatest on a 1 hour. So just a really good way to kind of look at everything in context. I love doing this now. That way I'm not having to flip from, time frame to time frame. I can just see it all on one screen. That actually helped me today during you guys' stream, because I think I even commented that I was trying to catch a bid on the euro dollar on there. And and this is exactly what I was doing. I was just sitting here watching a 1 minute. Actually, yeah, if I just go to the one, let's see here. I think I was somewhere down. Let's see here. 8. Yeah, down here. I think I was right here. So there's to the left on a 1 hour, there's a demand zone. This is a 1 minute time frame. So I was basically just keeping an eye right here and looking at the W-ish type of a setup. So like, let me see here. This might have been the better chart. Yeah, so on the 5 minute, I was looking here, down, up, down. So I was looking at the double bottom, and then when price came up, that's where the volume started to fade because we started to run into the lunchtime doldrums, right, the slower period. So by utilizing Coach Michael's W pattern, kept me safe. So I stayed the heck out of that trade. All that thanks to looking at these different time frames, because I started to get excited right here when I started to see these candles. In fact, I kind of got annoyed that I missed that move, but I was looking at some of these other time frames thinking, well, it doesn't really look that great. So yeah, it just, I don't know. It's just something I wanted to mention because it did help me to stay safe.
Oh yeah, for sure. I mean, and you actually have a question from Webb Rashville.
Yeah, I see that.
Good to see you in the chat. Well, the top 3 pairs to keep an eye on.
Top 3 pairs. Well, I'll tell you, Webb, the top 3 items. U.S. oil is actually the strongest bearish item I'm looking at right now. Now, Coach Michael and I talk about U.S. oil being somewhat of our problem child, meaning it sets up all the time. Oh, Webb, you probably know. You're on our morning streams, I think. But it's kind of the problem child. And let me go back to my other chart. Meaning we look at the setups, but it just seems to not want to do what we want it to do. He and I trade similar. We trade the curl around of a accumulation or the curl down of a distribution. He refers to it as his level 1 and level 2 setups. I just simply refer to it as buying low on the curve, selling high on the curve in premium if you're trying to short.
Right.
But anyway, let's see here. Let me just reset this. So when it comes to oil, yeah, that's what I was saying. It just doesn't always do what I want it to do. So let me see here. My fundamentals are telling me to short this. Well, that's a 4 hour. So I basically need to find a supply zone. Yeah, that's right. I was keeping an eye on this one up here. It's too far away, though. It's not going to be there most likely anytime this week, possibly next week. But yeah, that's one of my top setups. Come up here and sell it. But as far as more near-term stuff, let's take a look at dollar Japanese yen. So that's the strongest bearish currency pair I have, -7. So I'm basically keeping an eye on this supply zone right here. Now, this is a 5 minute supply zone. For being only 5 minutes, it's quite wide. It's about a 30 pip zone. Again, dollar Japanese yen is the highest ATR pair for the majors. So, yeah, I kind of like this. We got a really nice, a little bit of a doji candle before the strong continuation down after that obvious big spike we had from whatever report we had come out this past Friday. That would have been this week, Friday. What report was that? Yeah, the retail sales. So the retail sales, that's what this is right here. That's the retail sales number coming out quite poorly. So once it did, it kind of based and went sideways for a little bit and then continued down. So I love that. All this good volume there, meaning there was a ton of selling interest. So if price comes back up into this area, that's probably going to be one of my, and it's not even that far away. So, give me another 30 pips, Webb, and that'll probably be something I'm going to jump on. Now, if this happens to fail, so obviously that's what I'm looking at. But if it happens to fail and go through, then I'll be okay to jump in up here. Because what are we looking at up here? Well, we're looking at a zone on top of a zone. Now, again, this ain't anything that's going to set up this week necessarily. Well, this bottom one may. But this one up here, probably not till next week. But up here, I kind of have a zone on top of a zone. So there's a little bit of supply. There's a little bit of supply. I just kind of wrapped a rectangle out on both of them. But that's the origin of this strong move from the retail sales number that came out last Friday, the poor retail sales number. That's the origin of the strong move. So that should be the highest probability over this one here. So this one's kind of out in the middle. It's not diddling in the middle because there's no, it just came in base sideways and then dropped. So it's not like it was a ton of candles to the left. I don't count this because price left that zone before coming all the way back. If these candles would have kept going straight across, that would have been a different story, but it didn't. It left. And then, on the way down, it kind of wipes out that area. So yeah, the more immediate term, one of my favorite pairs I'm watching right now is the 149 level on the dollar Japanese yen. So that's one. U.S. oil, I'm not too interested in that. Nikkei is one that I was pretty excited about. However, it kind of looks like it ran off and left me. I was too busy flapping my lips and trying to get into my stream earlier. So that was one of my top three, but it came down and jumped in and ran off without me too quick. So maybe if we get a little bit deeper, I don't know. Let's look at this a little bit. So that's a 1 hour demand zone. Or no, 4 hour demand zone. I'm sorry. I might consider if we get a little bit of a pullback, maybe trying to get into it, take another attempt. Just give me like a little bit lower than this low point. It's been mitigated now. So it's not guaranteed to be as strong as it was the first time. Because you see all the volume that it used once price hit. So I might take another attempt at that if I've got my eyes on it, but probably going to drop the risk a little bit. But look, the reality is when it hit that demand zone, it didn't go in that far, right? You're talking maybe 10%, if that, 5%, 10% into the zone. So that's a pretty strong rejection, even on a smaller time frame. So if I get a little bit deeper of a retracement, I might consider taking that trade. Again, I'm just going to decrease the volume just a little bit since it's not a grade A setup anymore. It's more of an A minus or a B plus, right? Because it's already been mitigated. So that still might be in my top three, Webb. And the reason I love it so much is because it's the 4 hour demand inside of the daily demand. That's my favorite confluence I see. So yeah, just give me another bounce and I might still take a stab at that one. And then, we had the gold, which I already kind of went over. That 3,300 level, probably going to be up there. The silver, That'll be up there, 37.19 area. But then the other two, the brand new ones that are on my screener, again, are CAD Jap and CAD Swiss. So on the CAD Jap, for short, I'm keeping an eye on this supply zone right here. I just set an alert at 106.90. Couple things I like about this area. Number one, pretty nice strong drop after that one candle of basing action. Number two, the volume was okay. Could have been a little better. Number three, psychological 107 number, 107. There's 107 right there. So that's just that's an odds enhancer. That's just adding to pretty decent idea of selling this thing. It's going right through the upper part of that supply zone. What else? We got a 4-hour downtrend. Okay, lower lows, lower highs. What else can I stack in my favor? Let's see. Do I get any help from the curve analysis? I don't know. Let's take a look. Okay, so from this low point to this high point, you could argue we're diddling in the middle, right? We're in the middle of that area. Now that suggests that's subjective. That's obviously a big swing. Well, some people might do their curve analysis from this little swing high to this swing low. Okay, it's daily time frame. So now we step down into 4-hour. We got the downtrend. And then obviously when we look at that on a 1-hour, it's going to be a supply zone within that curve analysis. So just like a lot of things we use, just like all the settings that we can adjust in all the various indicators, curve analysis is subjective. It just depends on where you're looking at the most recent swing high and swing low. Because again, on a daily time frame or weekly, daily, since I'm buying on a 1-hour or selling a 1-hour. On a daily, yeah, the argument could be made this swing low to swing high. That's more of the extreme. But again, you can also make the argument that that's the most recent. So if you use this one, then we're selling high on the curve, which you're selling into premium. So, it just depends on how you want to squint your eyes as to which one you want to use. I personally will use this one just because I'm getting such a bearish reading. Again, CAD Jap, it's giving me a -5. So Canada Japanese yen, just so you know, the retail positioning, so meaning the retail traders, people like you and me on a laptop in our home office or whatever, they're net long. So I'm sorry. Let me look. Let me double check. Yeah, net long.
By the way,
those trades.
Real quick, I'm going to update my P&L. I have a negative $43 P&L at the moment. I got into a gold trade, but then immediately got out of it on my challenge accounts. And I think I'm about to get into a gold trade. So just hop
on over if you want.
Yeah.
So do you want to hop on over?
We can switch over. You can keep going, but I did just get into the long on gold here. Risking I'm risking $80 to essentially make about 150-ish. So, but yeah. So anyway, Sorry, continue. Didn't mean to interrupt you there.
Oh no, you're good. Yeah, I'll just go through these last two I've got. But yeah, that's probably gonna be one of my favorite setups, Webb. Just to finish off the answer, this one here as well. Look to sell that, and then as far as a take profit, let me see here. Where am I getting the most volume? Okay, getting a lot of volume right here, so I might drill down into that little area here, and. I guess the aggressive zone to look at as far as buying to cover just ahead of would be that one. If I wanted to be a little more conservative, I'd probably be looking at this on the 1-hour and kind of, I could either go to the top of the real body or to the proximal line of that red candle down. So let's see what my risk reward looks like here. So if I sell here, put a stop loss. So let's just say we put it in there. Let's just make it 20 pips. So 20 pips. All right. So the proximal line of the 1 hour, well, that's only giving me it's giving me a 2.5 to 1. Actually, almost 2.5 to 1. Let's say 2.25 to 1. If I go to the proximal line of this zone down here, it'd be right at a 3 to 1. So I'd be okay taking that, because even if I bought to cover just ahead of this, it's about a little over 2 to 1. Now, what I'll probably do is, as price comes up and drops down, once we get in this area, then that's where I'm just going to start trailing my my stop loss down, and just like a carrot on dangle a carrot. So I'll put I'll just keep dropping my take profit and my stop loss until eventually my stop loss gets hit for whatever profit I get at that point. So that's probably going to be one of my new favorites, because again, CAD Jap just jumped onto the top setups just today, just a few hours ago. And then lastly, CAD Swiss, and that one is giving me a -5 as well. Okay, so just taking a look out, might see what's going on in that area. And well, actually, one of the better moves already happened, but this would have been a good, oh shoot, let's try this again. So yeah, this would have been a decent move to take, but it's already gone, right? So that would have been about a 2 to 1 if I'd have jumped in there. So that move is over with. That's old news at this point. I'll just leave that there. Let's see, 2 hours. Yes. What did that 4 hour look like? Yeah, probably. Let's see here. Okay, so here we go. We got a little bit of a supply up here. Got that last red candle up before the big move down. So what do we got? So we got a pretty nice leg out, or several legs out. We got some little bit of volume growing on that second and third leg. So actually, if I drill into this area, we might even find something a little better. What we got here? What's a 30-minute look like? Oh no, I already looked at that one.
Just got stopped out of my gold long, by the way. So I'm down.
Oh, okay.
Down 209 to Paul P&L 209 in the red. But that's okay. I just needed, it looked like a pretty decent bullish setup there on the gold for a second, and I just needed to get it. I wanted to get into something for everybody, and it just looked great. And we had a lot of rejection off the lows here of the overnight, so got into it, but it didn't make the continuation upwards. No big deal. Down 200. Live to see another day. No biggie.
Yeah.
Sorry.
No, good. No, good stuff. I was just chuckling. No sleep narrator. I love your question, and I know exactly what you mean. How long do you have to trade for before you can stop using strategies and just feel it in your nuggets? Well, I would just say that you never want to stop using your strategies, because what I'm saying is, obviously, I go off the fundamental data. I go off what the chart says. But having said that, there's times where, and I think this is where this might answer your question, there's times where I have a good looking setup. Maybe the fundamentals are going in my direction, but something just feels off. Well, then don't trade it. Like I've had that happen a few times of late. Even this morning. It's hitting the zone. Pretty strong move out of that zone as far as when that zone was created. Pretty good volume. Fundamentals in my favor. The sentiment is in my favor. something just didn't feel right. And you know, the quick answer to that is it takes a while. It might take you a few years to get to that point to where maybe you feel good about a particular trade, but you just something makes you hesitate. Because I always often say, at the end of the day, your gut will tell you when you'll get to a point to where your gut will tell you this ain't going to work, or I have doubts on this, even if all your system is telling you to go place that trade. Yeah, there will be a point in time where that will start to keep you safe. So it's different for everybody. I know it took me several years to get to that point, 6, 7, 8 years, to get to that point to where now my gut is superseding maybe my system even. And oftentimes it's right. Your first instinct is often the correct one. I mean, it's cliche. They say it all the time. The same's true in trading. It just takes a while to get to that point. It takes thousands of hours of looking at charts, videos, and levels, and supply and demand zones, like for me, and then how it relates to all the indicators I use, the odds enhancers, a lot of stuff. But yeah, there'll come a point in time where your gut will start to keep you safe at some points, to where you're not trading on a whim. You just literally trust your instinct, your intuition. So
Yeah.
I don't know. Any thoughts on that, Paul?
No, I think you pretty much hit it. Like you should always have some sort of structure, but then like your gut will come into play in terms of like just experience you have and things you've seen before, and like you'll remember, oh, the last time a situation like this happened, maybe there was some weird, maybe like the order flow just acted in a way that made you realize, oh wow, this last time this happened, like it was like a fake out or whatever, and you just have the urge, like it's like the structure is like half there, but maybe your gut is telling you based on experience that you should just take the stab at the trade, even though the structure isn't fully there for you. But I did just get long the ES just now.
Oh, please,
one
I'm done.
mini.
You can
So
hop over to you if you want.
yeah, we can do that. It's on a continuation here. I don't know what's. Oh wow, I really thought. Wow. Yeah, we can hop over to me. It might just get stopped out in a minute here, but let's hop over to my chart. We can show the trade. I'll actually message that.
Oh, yeah. Back to Paul, please.
Come on. Okay. Big buyers just came in here, so let me get my little handy dandy circle. Big buyers came in right here. It doesn't look like it on the this volume down here because it looks bearish because that blue candle has all that volume. But believe it or not, that if you're looking at like third-party data and you're looking at like deltas and stuff, that was actually a lot of aggressive buying volume. So a lot of people were lifting the offer aggressively at that level, not the opposite way around, where sellers were like hitting the bid. There were a lot of people lifting the offer. So there was aggressive buying pressure there. So that made me want to get long that, because it didn't look like, shorts were covering. That looked like new longs entering to me. But that's just.
Were they entering at the bottom of that candle, like where the wick is?
Right. They were entering between 6. So they were I can give you the exact. So they're entering at 63.92.25 and 63.92. So yeah, basically at the bottom of that wick and the bottom of that body. So those two ticks right there was where all of that aggressive buying just started. And now it looks like we want to, the next largest bit of liquidity that exists is kind of like up in the Believe it or not, 63.97, that level that I have marked out as value area high. So that is kind of where the next big bit of liquidity is. I mean, there's still a decent bit of liquidity in between there that like we'd have to chew through, but that is the largest offer block that exists at 63.97. It's about 50 contracts, whereas throughout the other ticks, there's like anywhere between 17 to like 35 contracts on the offer per tick. So we will see. We'll see if this
Wow,
continues through or just comes back down. Well, I don't know. Maybe the buyers, look at this. See, look at that. The buyers might, get a little weak-handed here, or maybe the buying fizzles out. But that's kind of the thought process. Like, and what somebody like a coach like Sam, when he trades, he'll see something like that and like scalp the trade instead. Like, so he would have gotten out already. Like he would have been out a minute ago at
yeah.
least, when he would have made like, 75 to $100 and been done with it. Whereas I'm looking for a little bit more of the rotation up to that value area high number of 63.97, for a little bit
Oh,
of a
yeah.
larger play. I'm risking 75 to make like, actually, my target profit's in the wrong area here. Should be over here. Risking 75
So
to
that's
make like 175.
no, that's interesting that you explained that, because yeah, at first sight, anybody seeing that big downward expanded range candle with that volume would have just assumed that's sell volume. But you're saying high volume,
Right. Yeah.
catching the bid.
It's from the delta.
Yeah.
Yeah. Exactly. It's instead of the sellers hitting the bid, it's the buyers lifting the offer actually aggressively.
Yeah,
So,
I gotcha.
um, technically that could
Wow.
be shorts covering. That technically could be shorts covering. Like I don't know the
Yeah,
overnights well
true.
enough to be able to say like, hey, that's not shorts covering or whatever. My intuition was there weren't that many shorts up above for that to be like fully shorts covering. I was just making a educated prediction
Hmm.
here that was new buyers entering, and I wanted to get long off of that, and that could be wrong. We could just see me get stopped out in a minute here, but you know again, just
And
learning.
you're getting that info from the level two, or from which? Oh, the Dom.
Level
Was it the
two and
Dom?
my third party, yeah, like it's the depth of market. Yeah, it's
Yeah.
the depth of market
Okay.
data that I have. So um but yeah, depth of market essentially, and I just got stopped out there, so update it. Not the greatest night, but with the good nights come the bad.
Sure. Now, is that the same thing? Is it just different words? Dom and level two, is that the same thing?
Essentially, yeah, because depth of
Essentially the same
market
thing.
is
Okay.
just depth of market is like the dom and level two are just it's the bid offer like ladder. It's just the ladder and showing you
Yeah.
how much,
Okay.
um how many bids or offers are there for each tick all the way up and down. But
Hmm.
the and it also will show you how much volume has transacted across all of those ticks as well, but it's easier to see in a different kind of, and for me at least, there's like different softwares that show the data a little bit better than, like, for example,
Hmm.
on this bid offer ladder here. It's kind of hard to
That would be
to
nice.
see
It would be nice to
it.
have that in an accurate form for Forex.
Yeah, right. Yeah,
Really
seriously,
would.
that'll be major. I mean, you kind of like, and that's the thing with futures and stuff. Like, you traded the futures contract for the euro USD or whatever. You would be able to get that, at least that data. That's more,
Right.
but again, like, that's not trading the physical cash, or that's not trading the cash product. That's trading the product that people will hedge with. But there are still,
Yeah.
every hedging market has to have speculators. So there's people just like you that are
Yeah.
speculating on the futures side of the forex instead of just the pure forex, pips side. So
Yeah. That's,
yeah.
yeah. I mean, if I were, well, that'll probably be one of the first things I do get into when I start getting a little more deeper into futures is currency futures, since obviously I understand the fundamental, uh,
Mm.
stuff behind it and the
Yeah.
sentiment. So yeah, and to have the level 2 data, oh man, that'd be great. Yeah, I
Mhm.
think that'll probably be a natural segue for me personally, rather than jumping into like the ES and all that, which I still would, because I've gotten quite familiar with the indices just in the last year. I mean, like I said, I've really only been tracking them for about the last year. Prior to that, it was
Yeah,
just
yeah.
strictly Forex, but finally got the point where I'm ready to branch out, just to give more opportunities to trade something. So yeah, currency futures it probably will be.
Yeah, no, it's I look forward to that day. I do look forward to that, seeing you trade
Yeah,
that at some point. I will eventually. I will make the jump and be trading the currencies here on the futures. It's just going to take me a little bit. I need to make some charts and stuff, some special TPO charts and market profile stuff. But if once I get that done at some point, I'll definitely be looking into it a little bit more for sure.
yeah. No, good morning to you, John Dale. Nice to see you. We're on here for about another 20 minutes. So if you or anybody else want us to take a look at any specific charts, you got Mr. Futures Paul there. You got me with Forex, so just let us know. We do got about 20 more minutes, so we'll be happy to take a look at anything you're after.
Mhm.
Are you going to be watching any of the Jackson Hole Summit speeches tomorrow, Paul?
Oh yeah, 10 a.m. 10 a.m. We'll
10 a.m.
definitely be watching PAL, I believe. We'll be watching PAL
Yeah,
for sure.
yeah,
But that'll be crucial to. I mean, last time I believe the meeting was pretty short. Like his speech was like not even 10 minutes or something. It was like 10 minutes maybe.
yeah,
Uh,
yeah.
but yeah. So
So they don't even have that on here. I mean, they don't have the time. Wait a minute, I'm looking at the wrong day. Oh, Fed chair. Okay, Fed chair. Yeah, 10 a.m. I see it. I was looking at Saturday.
mhm.
I guess they're going to be working overtime, working on a Saturday. Yeah, Lagarde speaks on Saturday. Governor Bailey, Governor Ueda. That's all on Saturday. And then President Trump speaks at 11 a.m. So he speaks to. Oh, well, that'll be interesting. You got Jerome Powell speaking at 9 a.m. Central. Then you got Trump speaking 2 hours later. Oh boy, is he gonna be happy tomorrow when he speaks, or is he gonna be disappointed? What do you think, Paul?
Oh, dude, I think we know. I think we know the answer to that question. I think we
That's
know
what I
that
chuckled when
answer.
I asked. Yeah, if he definitely, if he doesn't, if
Uh,
he keeps the rates the same, yeah, it's gonna be a tirade. So
for
we'll just
sure.
have to
For
see how that goes. Yeah.
for
Other
sure.
other than that, looks like the only other main reporting we have coming out is 7:30 a.m. Eastern or Central for the retail sales numbers for the Canada dollar. So we got core retail and then the regular retail month over month. Let's see,
Mhm.
core retail previous number minus zero point 0.2, projected to go to 0.9 tomorrow. Previous regular month over month was minus 1.1. They are projected to go to 1.3. So, yeah, if all that comes out halfway true, should see a little bit of good Canada strength. Now it's more of a orange folder news, but it's retail numbers nevertheless for Canada. Taking a look at Canada dollar. Let me take a look at their heat map real quick. I just wanted to
Sure.
see retail
Yeah.
sales. So Canada dollar has been actually doing quite well. Um, they've got a economic heat map percentage of 71%. So that just means 71% of their reports have beat expectations. And when it comes to the retail sales number, yeah, the previous number was bullish. So assuming that tomorrow's is bullish, that shouldn't change it. It should stay the same, 71%. But I think the Canada dollar is actually tied with the British pound for strongest economic surprise currencies right now, 71%. So, yeah, good chances to buy the pound, buy the Canada dollar, and honestly, looks like the U.S. dollar is currently the weakest economic
Oh,
surprise
really?
meter currency. Yeah, it's a 42%, and the Swiss
Hmm.
franc is a 43%. It makes sense because yeah, we've had some quite negative data come out lately. Um, yeah, last week we had
With
the
the
retail
PMI
sales.
and
What's
yeah,
that? Yeah,
with like
yeah,
the
retail
PMI.
sales, jobless claims numbers, PMI data, both sectors of the PMI, the services, manufacturing, also
Hmm.
CPI for the currency anyway. For the dollar, the CPI was bearish. Uh, Lower inflation, which is obviously the opposite of stocks. It's negative, or I'm sorry, yeah, negative for the currency, positive for the sector, the stocks and our pocketbooks, right? But yeah,
Hmm.
you've had the PPI data. Well, no, that was a bullish number, I guess. Yeah, just going back to the bearish numbers. Yeah, Jolt's job openings, that was a negative number. Obviously, the jobless claims, non-farm payroll, we had that horrible number a couple weeks ago. So yeah, the dollar's got a lot of red on here, and the stock market ain't much better. It's actually at 33%. So they've only had 33% of the numbers for the stocks. Now, of course, that's because of the CPI numbers being different for stocks compared to the dollar. But yeah, I don't know. Maybe that could add. Maybe
Morning.
that could add to the whole rate cut
Right,
option.
right, right, right.
You know,
Yeah.
but we'll see. Is it going to play politics over the numbers though? That'll really be the question. So again, we're not Nostradamus. We're not
Right,
economists. We're just going to take whatever he says and trade from it. I don't want to
right.
waste my brain power. I've seen a few people talking about that on streams lately. Like, I don't know what yeah, I don't either. Join the club.
Yeah,
Just
yeah,
wait for the hard
yeah.
data and trade after.
The Fed is in between a rock and a hard place. Let's just be honest.
Yeah, for
Like,
sure. Sure.
not having unemployment stuff going against you, and then on top of that, having like the PMI come out against you, you're just between a rock and a hard place. If inflation starts going up and unemployment starts going up, you are in a world of just indecision. Like you have to choose. You have to make a choice. Keep inflation down,
Double edged sword.
and people
Yeah.
lose their jobs, or keep the economy running with lower interest rates and allow inflation to run. Which I think we all know that the Fed, if they're going to pick one of those, they're going to not let inflation run, and they're going to they would let likely they would look at sacrifice the now to protect the future kind of
Right.
mentality, I think, because the last thing you do want is some sort of like just persistent inflationary environment to come about. So, which I understand,
Mhm.
but at the same time, the people that are losing all their jobs and stuff don't understand, which I completely agree with as well. So, tough job. Never would want it.
Yeah.
Would never want a job as a Fed board member.
Yeah. You're damned if you do, damned if you don't. Like, yeah, I couldn't imagine the stress that they have to go through, especially
Yeah,
Powell. Golly. Well,
yeah, man.
hey, he just has what, a few more months to go, something like that.
Hmm. Yep,
He's probably
he's
counting down the
definitely
days. Like, you ready to retire, get paid to go make speeches at forums and things of that nature, and just coast off and live the life.
so true, so true.
Yeah.
I am, by the way, in another long on the ES. I am constantly trying to get long for this move upwards. I feel like, and on top of that, I'm starting to learn that marketing into orders here on the ES specifically is rough. I marketed it into two buys here, like just doing a market order, and both times I got filled two ticks above where the market was trading at. So that's for two contracts. That would be $50. I got $50 of slippage, which isn't isn't fun. So
Yeah.
my average would be 63.90, 325 if we were in a normal liquid market, but instead it's at 63.90, 375, which, you know, $50 is $50. I'm not just trying to throw away $50. So, but like the Nasdaq is trying to break out constantly, and the Dow does not want to play around. It just wants to continue to be just deflated. And now the Nasdaq is pulling back in, which is why we're seeing the ES pull back into its little range that we've had over the last 30 minutes. And my execution is just in a bad spot. The max amount of contracts I'm going to allow myself to get long is 3 here, but I have to wait until it comes down to like roughly the 92.25 area before I would even consider getting long the third contract. So that's essentially the range in which I'm willing to get long that third and look for another. The ride up to, you know, my thesis might be right, my timing just might be off, like for this rotation up to the value area high of, you know, 63.97 here. So which also, I guess, if I look at the overnight high, let's look at the overnight high. Overnight high is almost 6,400. 63.99 is roughly the overnight high, with a lot of resistance at 63.97.50. So 63.97, retesting that would be interesting, I think.
Yeah.
But you could look at it. You could look at it like the rotation upwards doesn't make too much sense because people are maybe taking more of a risk-off approach, selling, getting out of positions because of tomorrow with everything with the Jackson Hole Symposium. So with Jerome speaking at 10 a.m. So maybe going long is a little bit more of a bolder take than just simply looking to get short. But the order flow is telling me otherwise. So what were you about to say? Sorry.
No, I just meant to ask. So just going back to when you were showing one of the guys in the chat, kind of your trading strategy, when you were talking about the your points of control, I'm sorry, your value area high, your value area low. How do you get those two lines again? Is that where some of the higher volume nodes or lower volume nodes are? I think it's just if you don't mind explaining that part.
If I wish I could show it, it's just I use the charts. I use charts on a different brokerage that I can't show on the stream. But essentially, what you'll see is like the best way I can kind of show it is over here on the order ladder to the right. You can see all this volume in like peaks and valleys of sorts building, and it creates like a distribution on the day. And then what'll happen is at the end of the day, once all that's recorded, some of the software or some softwares that you can get will like take that distribution, and then it'll get all the data and then provide you like a highlighted area of that distribution where like the 70% of the trading volume occurred. So maybe right now, like if I was to just eyeball it in this overnight session here, you could say 70% occurred between 63.90 and 63.96.50 on the ES. And then anything outside of there was like excess volume. But most of the comfort was within that 6 points of range. Now the low end would be that 63.90, and then the high end would be the value area low would be the 63.90, and the value area high would be like the 63.96.50 in this case for the overnight. And then the point of control would be wherever the most volume traded. So you'd probably say somewhere it's either 63.95.50 or 63.92.50. It's one of the, or here, actually I can. So technically it would be 63.92.50 in this overnight session would be the point of control. So yeah, that's kind of how I get that. But I do that for the regular trading hour session for a whole entire day. previous day. And then I'll also look at the weekly data too. I'll look at what the distributions look like for entire weeks of time, entire months of time, etc., and gauge, do a relative gauge on where value is during, if you're looking more longer term, if that matters for your trading strategy. I just do it more so for curiosity, but for the longer term stuff. But I mostly focus on the intraday or the daily distributions.
Right.
Yeah.
Good stuff.
Mm-hmm.
Good stuff. Yeah. So I'm just basically going to be finishing out the rest of the day and tomorrow, just keeping an eye on the gold and silver. Gold, silver, and Nikkei as far as buys. Yeah. And then, just like I said earlier, CAD Jap, CAD Swiss, dollar Jap, dollar Swiss. Those are the items I'm looking to sell. So pretty simple, pretty short and sweet top setups, trade plan for the day and tomorrow. Definitely after Jackson Hole, I could definitely see every single top setup on my list changing, obviously, depending on what comes out of their mouths. But it's been slim pickings for me, Paul. Most everything has been neutral, and I can definitely tell. I mean, obviously the fundamentals, it's got a little more parity between the buys or between the bullish and bias sentiment with the fundamentals for me. Because normally I'll have 12, 15 setups, sometimes even up to 20. But right now I literally have 8. So that's the lowest I've seen it in a while. Relatively pretty decent parity when I'm looking at just the economic and sentiment data. So it's quite an interesting time period. But yeah, guarantee it's all going to blow up after the symposium tomorrow. And I'm going to come in Sunday, look at my Sunday charts, top setups into the Monday morning. Everything's going to be flipped on its head. So I'm pretty excited. I don't know about next week's trading action.
Yeah, me too. I'm excited. I'm very excited. I'm excited for tomorrow. Like it's the 10 a.m. call is just going to be a good one. Especially to be able, also the exciting part about it is just doing it on having it on stream and live and getting to discuss it with everybody. And
you guys are actually playing it on stream?
Yeah, we should be. So. We should be playing it on
perfect.
Stream. Yeah.
No, I was going to say I was going to be watching it for sure with you guys in the background, but if you're going to have it on stream, that's even better.
Yeah, exactly. So it'll be that's an important one. I think we put the FOMC the last meeting on stream when it was at 2:30 with Pal talking and answering questions. So some of these really important meetings, it makes a lot of sense to put it on stream and kind of have the charts up, but have it on stream and let everybody know if we're in trades or out of our positions. Most of us are not taking trades during him talking. Just let everything let everything happen, and then once it's done, then look to see if there's any setups to play out. But yeah, so
well, we were I was excited this morning on Forex Fire, just having some data to actually trade off of, because normally we don't get a whole lot of data during our stream, but we did have that PMI data coming out for the euro and the pound, so it was definitely kind of nice to have a little bit of action there. And it kind of helped me with my gold trade, to be honest. I mean, it doesn't directly affect gold necessarily as far as euro, British pound PMI data, but it still kind of throws a little bit of excitement into several of the assets and the metals. So, but no, that's great. So I'll definitely be tuning into you guys whenever that's on, and I'll probably likely just set my chart to a 1 minute time frame. Just sit and watch the telemetry machine go crazy. Probably on the dollar index, maybe the NASI, the S&P, maybe even gold. Yeah, especially gold, since that's one of my top setups. So that's probably where most of my attention is going to lie, is gold and silver tomorrow.
For sure, man. Yeah, that's a good idea. I mean, I'm sure gold will go, if the equities are going crazy, I'm sure gold will go crazy. So that'll be a fun one to watch as well. I'm right there with
Yeah.
you. Um, Gold has been a little meany to me lately, so
Yeah.
I'm not gonna trade gold as much personally. I'm gonna try and stick to the indices and some of these agricultural products I've been enjoying trading. So I'll probably trade them a little bit more. But if something in gold does pop up, I I'll take it. I'll take it here and there. But it's got to be sweet. It's got to be a sweet one. So
Yeah. Well, gold has just been interesting. Like I'm just looking at my trade history on my GUI trades. That's been the most popular thing I've traded. Here I am, a currency
mm,
trader, but I've just been not getting as many good setups in Forex. So gold and silver have just been giving me better ones right now. I mean, albeit
yeah.
gold obviously trended sideways when you look at the higher time frames, but just looking at some of these smaller time frames, I've just been lucky enough to get in and out on a few winners. Got one loser, it
Mhm.
looks like, in here, but other than that, it's just a few other small winners. So um, I didn't know I was going to fall into the gold trap, but I guess I have.
Oh man, I mean it's a fun one to trade though, so it can be fun to
Yeah,
trade. So I don't blame you. Don't blame you at all.
yeah.
Um, well,
One,
I think we're
two.
wrapping it up here. I think we're gonna wrap it up. We got 30 seconds or so left.
Nope.
Um,
Right on.
every everybody, tune in to the Forex Fire session at 3:30 a.m. Eastern time, right? 3:30 a.m.
3
Eastern,
a.m. 3
and
a.m. Central Standard Time. Yeah.
so 3 a.m. Central Standard Time, so 4 a.m. Eastern. Tune
Mhm.
into it for sure. Awesome session, and then the 9:30 futures takeoff session. So good to have everybody in the chat. Thanks for stopping by, and we will see you tomorrow. All right, Coach Tiger, it was
Yep.
a pleasure as always,
As always.
and have a great weekend. All right, have a good weekend.
Yep. Yeah, you too, man. Stay safe, everybody. Jackson Hole tomorrow. Be careful with the
Yes,
speeches.
yes. All right, catch you guys.
All right.
See you,
See you
Coach.
guys.
Hola Prime, trade with transparency.